A special thank you to each of our subscribers who make this channel possible. Here's today's story. In a shocking statement made in the Oval Office on Thursday, President Donald Trump expressed his dissatisfaction with Federal Reserve Chair Jerome Powell, suggesting he could force Powell out of his position. This statement has reignited debates about the independence of the U.S. central bank and the implications of presidential influence over monetary policy. Trump's remarks came after he criticized Powell for not cutting interest rates quickly enough, stating, "If I ask him to, he'll be out of there." This comment followed a social media post where Trump declared, "Powell's termination cannot come fast enough." The president's frustration is rooted in his belief that the Fed is not responding adequately to the current economic climate, which he claims shows essentially no inflation. He argued that lower interest rates would benefit the economy by reducing borrowing costs, especially as prices for commodities like crude oil have decreased. Trump's assertion that Powell is playing politics raises concerns about the central bank's independence, a principle that has been a cornerstone of U.S. economic policy for decades. In response to Trump's comments, Powell has maintained a cautious stance, emphasizing that the Fed is not in a hurry to adjust rates and is seeking more clarity on the economic landscape. The Fed chair's term is set to run until May 2026, and he has previously stated that the independence of the Fed is a matter of law, with removals only permissible for cause. The financial markets appeared relatively unfazed by Trump's remarks, with stocks climbing amid optimism about potential tariff agreements with the European Union and Japan. However, the broader implications of Trump's comments have drawn criticism from various quarters, including Democratic Senator Elizabeth Warren, who warned that any attempt to remove Powell could lead to market crashes and undermine investor confidence. Warren highlighted the importance of maintaining a central bank that operates independently of political pressure, stating, "Even countries with dictators try to create a central bank that is independent of the president." The ongoing tension between the Trump administration and the Fed reflects a significant shift in how monetary policy is approached in the U.S., with many economists warning that undermining the central bank's independence could lead to long-term economic instability. Nathan Sheets, global chief economist at Citigroup, cautioned about the potential dangers of crossing the Rubicon on central bank independence, suggesting that recent market volatility may just be the beginning of a more significant economic downer. The situation is further complicated by Trump's recent tariff policies, which have raised concerns about domestic growth and inflation. Powell has reiterated the Fed's commitment to keeping inflation expectations anchored, emphasizing the need to avoid a situation where temporary price increases become a persistent problem. As the political landscape continues to evolve, the relationship between the White House and the Federal Reserve remains a critical focal point for both economic policy and market stability. That's all for this story. We upload videos every day covering many different subjects, so hit that subscribe button to stay informed. Thanks for watching.